Welcome, everyone. Today is a very exciting day because we're going to be unlocking service station selling secrets. Now, how's that for a great thing to do? So, very excited about that. Very excited to be here, and we've got two great guests. So, we're going to introduce those in just a second. But before I do, when I look back and I think about 2 years ago, just 2 years ago. And we were thinking that service stations were a dying, almost extinct breed of an asset class, right? Remember here in California, where it's like, we're not going to sell any internal combustion engines after the year 2030. You have to buy an EV. And so all these service stations would be gone. The government was clamping down. They're making it impossible to get building permits for new service stations. And, it's just like the death of the service station. But now, how have things changed since then? It's like all the automakers, they're canceling their EV programs. EV registrations are up right now because of the fuel crisis in Iran, but it's a very different dynamic market. And so we have two great guests to talk to us about that today. We've got Steve Haddadin. He is the general counsel of the RCAoC. He has also got experience as a service station operator, and he's a commercial real estate broker with his CCIM designation. And guys, go ahead and turn your cameras on, turn your mics on. And we also have Kelley Cheney. Kelley and I, we go back to, I think it was the summer of 2021 that we met at the International Business Brokers Association conference in Denver, Colorado. And so we've been working on a number of different projects together. And I find him to be a great asset in my corner whenever I'm working on anything related to SBA. And also, if you haven't seen the other videos that Kelley and I have done before, please check them out on my channel, my YouTube channel, where you're watching this right now. And don't forget to like and subscribe, comment whenever you've got something going that you like what's on the videos, because it helps that algorithm so more people will have access to this great information. So let's start with Steve real quick. Steve, give us a 30-second introduction to who Steve is, okay?
Thanks, Chris. Yeah. So who Steve is, I mean, Chris did a good job already kind of breaking that down, but I guess maybe he missed one thing, and I teach business law at Fullerton, something I've enjoyed doing recently. Other than that, yeah, Chris did a good job of introducing me and talking about what I do, and look forward to diving into what service stations have been in my experience. Thanks, Chris.
Yeah, and Steve, you grew up in a family that's entrepreneurial. In fact, you got your CCIM when you were what, 16 or something like that?
22, barely 20.
22. All right, missed
Yeah.
it by a couple of years, but you were still like Doogie
Oh,
Howser of commercial real estate.
yeah.
Yeah. And do you want to mention just real quickly what kind of experience you have with service stations?
Operating, managing, selling, buying, representing other owners in a transaction, some legal work with it, representing gas station owners in transactions, legally speaking, and issues with regulations and regulatory bodies and employment issues too. I've dabbled in that a little bit, employment law here in California,
Oh yeah,
and
that'll cause
financing.
you to lose your hair.
Oh yeah, and financing, entitling one, and student developing as well. So
Wow.
lots of different experiences and service stations.
Excellent, excellent. All right, Kelley, you are like the service station expert in the SBA world, right?
Well, I specialize in service stations. I mean, I've been in SBA lending for 21 years total. My 18-year anniversary here at Plumas Bank is July 2nd, actually, which is crazy to think about. And yeah, I started in July of 2008 here, right? And if you think back to July of 2008, that was a wonderful time in our economy, right? Kind of right as everything was kind of going down. But I was working for a much larger bank, got recruited to come over here and kind of help build this division. So fast forward almost 18 years later, I think the first gas station deal that I think that Plumas did back in 2008 was one of mine. And so it's a great expertise to have. There's a lot going on in the gas station world right now, for sure. So, but yeah, happy to be here, man.
I really appreciate you coming. All right, so Steve, I mentioned in the intro that, everything is really changing pretty rapidly when you look back 24 months. You know, as you have some experience in this area, what are you seeing?
You know, so one thing for sure is the price of gas stations have gone up a lot. Buying a gas station now is not a cheap product to buy. And people were thinking it was going to go down a lot or you're going to lose your money on your investment, all that. And I just kind of, when I looked at the number, just the speculation and everything, I thought it was on the pessimistic side. I did think, yeah, EVs are growing, but that's not going to stop any production in the gas stations. And I thought at best the urban areas, the downtown areas would have been hit the most, but not even there. I'm not really seeing any differences out there either. And there's not a lot of gas stations in downtown areas anyways. They're more spread out, but I haven't really seen them get hit or affected the way people were saying. And I thought the mandate, it was an executive order by our governor. It wasn't even like a law. It was an executive order. I thought that's just a symbolic statement. I didn't think it was gonna change anything. And I looked at, even when you want to talk about EV vehicles, they're expensive to buy. They're not cheap, even with the credits. The average family won't be buying one anytime soon. There's a lot of people out there that do have them. With that being said, my answer to that, I put EV stations in locations I've operated, and I see other operators putting EV stations in them, and they've been a good, I'd say, second source of profit. Call them as a profit station within the different departments
Hmm.
in the store, but it's not really affected gas volume and other things. And there's still transactions are happening, and we want to talk about operating a store. I guess we'll dive into that later on what you do in different markets, but every market's a little different. But overall, there's a way that everybody typically operates a service station, but every market
Yeah,
has its niche, so to speak.
yeah. Now
It's
you may
over.
not remember this as much as Kelly and I because you're young, but hey, growing up, every service station had a couple of mechanics bays in them. It's like you went to the service station and they would come out, they would check your oil, check the water in your radiator, and if you needed a mechanic, there was a mechanic on site, and that has changed so much over the years. So it's evolved from really being a service station to being a C store that sells fuel, right?
Yeah. I mean, you do still have some of those. I see a fair share of them around still, but maybe not checking oil. Some of them still have them. I see more smog shop tenants in
Hmm.
service stations. But you're right. That used to be the norm, but now you have some of that. And I look at them more as a stop and go place. And in terms of the time being spent per customer, that's kind of dropped a little bit, but there's still other trends that I could dive into. And as we talk about the site and what goes into running a service station.
Okay. So let's define the market just a little bit. So service stations, from when you're thinking about this, Kelly, are you thinking about only places that sell fuel as a primary thing, or are you looking at also like 7-Elevens that got a couple of pumps? Or how do you define that as a lender?
Well, you got there is technically it's defined by the industry classification code, right? And there's two different ones. There's one specifically for gas stations, and there's one for gas stations with convenience stores, and it typically falls into one of those two categories. You guys were talking, and Steve brought up a really good point. Is that 5 years ago, I think we were probably all under the impression that everybody in California is going to be driving an electric vehicle. I think I read somewhere recently that in the California market, in the state of California, there's about 36 million registered vehicles. And of those, 34 million of those, I think, are gas powered or hybrid, some type of um, one of the two, right? And so that means that about, by my math, that's about 94% of the registered vehicles here in California are still gas powered in some way, shape, or form, right? So, um, but there's a lot of other stuff going on too. I mean, you've got the political, right, with the EVs. You've got, the kind of war in Ukraine going on. You've got the conflict with Iran going on, and so I think, gas stations, service stations are seeing a lot of pressure right now, right? Gas prices are going up for sure. People, during those times, they kind of scale back, drive a little bit less, right? And so you're starting to see kind of, gas volumes falling down. But that's also one of the reasons why I really love analyzing the gas station deal is that there's so many different metrics to it. When you take a look at financing a typical retail operation, from a bank's perspective, what we really analyze is trending, right? Revenue trending. Is revenue going up year over year? Is revenue going down over year? And also you get into expenses and then overall, net income. With gas stations, it's completely different. The different metrics that you look at, revenue doesn't really have an impact per se when you're looking at gasoline, right? Because revenue, as the cost of gas goes up, revenue goes up, but that's not really a reflection of the operation of the station. What we really care about is gas volume, right? And then the profit per gallon of gasoline that we look at too, right? So, and we can kind of dive into that a little bit later, but yeah, I mean, it's one of the most interesting deals that I get a chance to analyze is gas stations.
Well, Steve, here's a question that I have as a consumer, and with your experience as an operator, you could probably address this. Is the profit per gallon, is that more of a percentage, or is it more of, hey, we want to scrape a dime off of every gallon, or how does that work?
You calculate your margins. Everybody has a different way of calculating, but we have an Excel sheet and we put in what the deliveries price is at, and you just put in what you plan on pricing it at, and you kind of look at what the competition's priced at. Now, keep in mind there's antitrust law with that, so you're not allowed to discuss your margins with competitors. So I don't like publicly talk about, what my margins are, whatnot, just to avoid any appearance of doing that. But I kind of look at what the sites nearby are priced at, and then I'd say, okay, well, I could safely price it at this to be, competitive. Maybe I'd be cheaper than them. Maybe I'd match them. Maybe I can justify being higher than one. Let's say it's an unbranded site that's I'm looking at,
Hmm.
and my fuel is I'll have a branded site. So the quality is kind of known versus the unbranded. You don't know where they're getting their fuel from. You don't know if they're top tier detergent or not and all that. So people will pay the higher price for the branded site. So, or if it's another branded site, different brand, let's say it's Shell versus Chevron or Arco, then I'd want to be competitive. So I put in a price that I plan on my Excel sheet, and it'll break it down for me and say, okay, well, my profit is, X cents per gallon, but it's not hot. It's not what people think it is. I tell people, if you want to know who's profiting on your gas, it's the state of California.
The state of California makes more money than either the service station operator or the refiner.
Oh yeah.
Probably more than both of them combined.
They probably on a gallon, they're probably making what 10 or 12 service stations make in a gallon. Yeah. Like if you compare their profit, if you combine 10 or 12 stations, they're probably that's probably what they're making, about 10, 12-ish in that range. Maybe like eight, yeah, 8 to 12 service stations combined. If you do the math, that's probably what they're making. So you want to
So
talk
you're
about
saying
saving
that the
gas.
state of California is making 10 times as much profit in tax as you're making as an
Yeah.
operator.
If you want to talk about where to save the money on gas, look no further than the state of California. That's what I tell people. Talk to your legislators, talk to the state of California about it. Once they do something, You'll have, I thought it was interesting that Newsom the other day put a public alert, don't buy from Chevron, they're high priced. And I thought, okay, it's known Chevron is high priced compared to the other stores, but why don't we look at what your laws are in terms of the gas tax? That's the first spot to look at. And then we can talk about all the other pricing issues.
Well, that whole kerfluffle with Newsom came about because Chevron put signs up at their service stations
Yeah.
criticizing the government for the high gas taxes.
Yeah, well,
So, and the Newsom thing kind of blew up in his face too. So, which was fun to see. It's
yeah.
always nice seeing the government officials getting a little bit of egg on their face. So, all right. So when you're dealing with service stations, the government has a lot to say about this, as we're talking about with gas price. But not only that, but you've also got like zoning, planning issues. You've got licensing. If there's a C-store, I would assume that they probably have the health department in there making sure that the hot dogs are the right temperature and stuff like that.
Oh, yeah.
It's like it seems to me that operating a service station has got to be one of the more onerous businesses when it comes to government interference.
That's actually right. So let me tell you, operating a gas station, I have interacted with almost the entire government. So many different departments, so many different requirements. So here's what I'll tell you. You're buying a business more than you're buying real estate. If you're buying both, structuring a gas station deal in general, it's just before I get into that, you're making two offers. You're not making one. You're
Mm-hmm.
buying the business and you're buying the real estate, if the real estate's included. If not, just buying the business. But you're buying something that's very hands-on, and the way you scale is by building a team. So it is a lot into it, but if you build the system and you put together the team, you can have multiple sites. I know people with 300 gas stations. I know people with one gas station. I know people with 10. I'm not going to get into what I've got going on, but I've seen different ranges.
Mm-hmm.
And everybody, when you compare them, it's about how they built a system, how they built a team. You have the team, you have the system. It's just a little bit of more work, but you plug and play with it, so to speak.
So you
But
scale basically.
yeah, exactly. So you can scale, but it's all about the team. It's all
Mm-hmm.
about the system. Now, with that being said, yes, there's a lot of regulation, and every city/county has different requirements. Like I've seen requirement to have a permit as if you're a restaurant for just having a burger and a hot dog that you just heat up and put on display for them to just pick up and grab and go. And I've seen that requiring a restaurant permit, and it's like an extra couple $100 for the county or the city. And sometimes you have requirements that I view as like a revenue generator for the local governments, and sometimes you have, yeah, yes, you have the health and safety stuff, and that's also important. Forget about the fact that's regulation you got to abide by. A lot of regulations you got to have with other than health and safety. You have OSHA requirements because don't forget you've got employees,
Mm-hmm.
you've got workers' comp issues, you've got insurance companies coming in with their requirements. Oh, don't do this, do that. So there's a lot of things you got to know when you're a gas station operator, and it takes the learning curve, I say, is about 3 years. Your first year, you're probably going to learn about 90% of the things you need to know. Year two, year three, that's when you figure. I say by the time you're at year five, you'll be in the position where you know how to scale. But you've got to be open to building a team because some people are penny pinchers in this business because it is a penny business. I talk about gas margins, but
Right.
you want to build a team. And if you're not willing to grow and build a team, then you're just going to be stuck at like 1 to 3 sites at best. To have
Mm-hmm.
multiple sites, you've got to build a team.
Yeah.
And Steve brings up some really good points about licenses. And one other license to keep in mind too is that if your convenience store sells beer and wine, right, you got to have a ABC license too, right? And there's and I know Steve can probably talk to this too, but there's a lot of people that I end up getting phone calls from that want to buy a gas station because they think it's passive income, that they don't have to be there on site to operate it, right? Cash-based business, fluctuations in fuel prices, margin maintenance, right? And all the different licenses that are required. And you know, for us, we're looking for experienced gas station owner operators, managers, somebody that's managed. I mean, there's a lot to operating a gas station.
Yeah,
So
exactly. Yeah. And I have this, well, I got this more from my father, but I agree with him. My father has this saying, he says, if you know how to run a gas station, you can run any business in this world because you're dealing with everybody and anybody. Your customer base is all the demographics, everybody from, you know, your blue collar workers to even we've had celebrities come in. We've had all kinds of different clients. You deal with all the personalities. You deal with all the governments. You deal with employees, you deal with organizational work as an organization, you deal with A through Z. You can run a gas station, you can run anything in this world.
And let's talk about it from the brokerage side. So, when I was doing business brokerage and as a commercial realtor, I would have residential agents come to me and saying, "Hey, I've got this gas station deal I'm working on." And in my experience, those usually don't turn out very well when you get someone who doesn't know what they're doing. So, Kelley, when you're dealing with the brokerage side, the brokers, are you mainly finding that you're dealing with people who specialize specifically in gas stations, or are you having more some generalists also that are doing a good job?
you know, most are experienced gas station brokers. Just like you said, we do get the phone calls from people that, are, maybe selling homes or, selling other types of businesses, and a gas station comes across their desk and, they want to move forward with it. And Steve touched on this too, and I'm glad it got brought up. And it's a great segue into what we're doing right now with the brokerage side. Is it when you're, and for those that are tuning into this live stream that are looking to sell a gas station or get into brokering a gas station, there's when you're buying the real estate and buying the business, those are two separate contracts. There's a commercial real estate purchase agreement, right, for the commercial real estate, but you're also buying a business. There's a business asset purchase agreement, right? There are trading assets, you have inventory, right? So state of California is going to require a bulk sale for those trading assets. You also have to transfer the liquor license, right? That's going to be under the business asset purchase agreement and factored into that allocation as well. So, I mean, it's complicated. Can it be done with the right help? I mean, I've helped some people that haven't specialized in gas stations in the past sell those. I mean, between the bank's expertise, escrow's expertise, it can be done. It's challenging. There's a lot to these transactions, not to mention all the environment be done well. So, but yeah, majority are experienced gas station brokers. I think when you're selling a gas station, that's probably who you're going to look for, as an experienced gas station broker.
Well, especially you're going to want someone who has both sides of the coin covered. That is, they can deal with the real estate asset and they can deal with the business brokerage side, right?
Correct. Absolutely.
So from a
Yeah.
broker's perspective on that, here's where I can chime in. For residential agents, um, my experience when I went to do my first gas station deal as a broker, we're talking many years ago. My first broker, I was with Berkshire Hathaway. They weren't too they were risk averse, so they wanted me to work with a commercial agent, like side by side. I ended up leaving the brokerage when I had that deal, but and I ended up doing it separately. But because they were residential only, they had a commercial division, but those were for somebody that was doing it for many, many years. And I don't blame them for being risk averse like that. But I have which this could be a whole nother class on its own, but I'll just say it in short. When you have a bulk deal, you have two escrows. If you could just get a good contract template in, whether you have one in your commercial department or you have an attorney do one for you or vice versa, escrow does most of the work for you anyways on the bulk side. They're the ones who's doing all the note. They're dealing with the ABC. They're doing everything on that side, the notice to creditors, all the requirements that they got to do for the business side of the deal. I really look at it as you're dealing with the residential or not the resident, the real estate side of the deal. And not a whole lot more different than buying any type of property per se, other than there's environmental work to be done. The business side, that's where the numbers and the calculations and all that other work that residential agents don't know unless I'd say if they took an intro to commercial class and then they sat side by side by a gas station operator and they learned the terminology and they learned some of the numbers. And then possibly if they read an appraisal report, they could make sense of a transaction. So it is complicated, but there's resources. And the good thing is you've got the escrow company dealing with most of the requirements. So just get the contract template going. And by this is the optimistic entrepreneurial side of me speaking. A lot of, if you go and present this to some brokers, they might not have the appetite to let one of their residential agents take on this deal. But I think anything in this world is doable if you set your mind to it personally. I don't think that anything is overly complicated that you should just sit at home and not take it on. I think you should try things. And I think this is, I laid out the roadmap, oversimplified, but I think a residential agent can take this on if they just start off with what I just said, really.
Well, you've got a couple of different types of transactions that you could be dealing with here. And I think we need to keep that in mind too. Because number one, a lot of people, especially if you're thinking of someone who wants some passive income, they're really looking at purchasing the land as a triple net asset.
Yeah.
So where they're seeing it just as they're leasing it to an owner operator, they're leasing it to like maybe one of the refiners who has their branded stations, and they're collecting the monthly rent, which is a whole different animal than dealing with an owner operator who's also running the business. And I think Kelley would probably agree with me that anytime you're dealing with a business transaction, you definitely want someone who is an accomplished business broker. And one of the things that I always look at is I want to make sure that if they're in the state of California, they're a member of the California Association of Business Brokers. And if they're outside the state or in, because all this, the CABB, the CAB members, they're also members of the International Business Brokers Association. And in California, it's different as you move from state to state. But in California, CAB has got a very good comprehensive set of forms. So you've got those templates that you were talking about, Steve.
Yeah.
In fact, I was on the forms committee and helped write those forms for almost 2 years. So,
Yeah.
speaking from experience, those forms are complex and there are so many nuances. And if there's anything that will get people in trouble and get them in court, it's attempting to do something they're not competent to do.
Exactly, which is why templates exist. And if you use the right templates, you'll be good on that end. Now, regarding the net lease that investors are looking for, you have those mainly with 7-Eleven sites. You have a lot of those where the franchisor, they, you can buy one where the franchisor is operating it or one of their franchisees are operating it, but it's leased out and you own the asset. You have those that exist. But most of your typical like Arco sites or Chevron or Shells, those are going to be bulk transactions unless you buy the property, sell the business yourself or make or I don't know, everybody has a different deal. I know people that they own the real estate only, the business only, both. Just whatever's listed on the market. If you go right now on LoopNet and you go filter, when you see a 7-Eleven site, you're most likely going to see just the real estate itself or the business itself. My experience.
I actually saw a 7-Eleven with fuel, and I think it was like in Tulare, down by Bakersfield, and it was like the highest priced 7-Eleven in the history of the state of California. It was like $20 million or something like that for a 7-Eleven. Did you guys see that story? It was just within the last couple of weeks.
No, but is it a travel center? Because when you're talking that amount, you're talking about 20 something pumps or so with, you know,
Yeah,
truck
it
stop
was
and
some sort of a travel center,
yeah.
but still, it was the highest priced single transaction in the state of California in history. It just occurred. Now, Kelley, you're dealing with all kinds of different things. I mean, because you're dealing with people who are just buying the business, right?
Yeah, absolutely. What we, getting into some SBA stuff here, but you mentioned CABB, the California Association of Business Brokers, right? I served on the board there from 2020 to 2022. That is a phenomenal association for anybody that's looking to get into business brokerage. You can check out their website. It's www.cabb.org. Take a look. I mean, they've got great training. They got great programs that they put together. If you're looking to get into business brokerage, I would absolutely stop by that website for sure. But from an SBA perspective, you can get an SBA loan to buy a business only, be operating from a leased location. I've got a couple of gas stations going on right now to where the owners or the buyers are doing that. There's a benefit to purchasing the real estate other than tax and all that stuff too. But from a term loan perspective, if you're buying a business only under the SBA program, you're maxed out at a 10-year term. Okay. If you're buying real estate, you get a 25-year term. If you're buying real estate and business together, and if we as the bank are financing $1 more on the real estate than we are on the business, then the whole term gets stretched out over 25 years. So you get 25 years for the business and 25 years for the real estate. We essentially get to treat it as a real estate loan. And from a cash flow perspective, a debt service perspective, I mean, that's tremendous. If the opposite is true and we're financing more business than we are real estate, then it becomes a blended term. You get 25 years for the real estate component, 10 years for the business component, and the blended term may end up being 13, 15, 17 years. But yeah, I mean, and so you don't necessarily have to purchase a real estate to get SBA financing to buy a business.
And so the blended term depends on what percentage is the business and what percentage is the real estate.
Correct. It's a weighted average based upon the use, right? So if 60% of the transaction is business, you're going to get 60% of 10 years plus 40% of the 25 years. And that probably pans out to be about 13-year term or 14-year term in that situation, which is still good, right? But huge to be able to stretch everything over 25 years if we can.
Yeah. Now, while we're talking about financing, so you can buy an existing business. You can expand your existing business maybe to a new location, in which case I think you can actually sometimes even get better than 100% financing with SBA, right?
Yeah, so on a expansion loan, there's some caveats to it, but yes, if you're operating in the same industry classification code, gas station, or restaurant, right? And you're looking to buy a second location or start a second location, then potentially, yes, you can get 100% financing to do that. For, SBA requires a minimum of 10% down payment pretty much on any transaction that involves an acquisition, purchase of real estate, buying a business. If you're doing an expansion, you get the same classification code, but it's also the same borrowing entity. So if Chris Inc. owns a restaurant and Chris Inc. buys a second restaurant and operates that under Chris Inc. and doesn't start a new entity, then technically that is an expansion and SBA does allow for 100% financing in those situations.
Okay. And then when you're dealing with existing owners and they're maybe trying to make the decision, well, should I buy? I mean, should I sell? Should I buy? I've fully depreciated this, whatever, then you can also do refinancing too, correct?
Well, we can refinance term loans. I mean, it's SBA financing, right? So there's a couple of different parameters we have to look at. Number one is the existing loan has to be on what's called unreasonable terms. So if they have a fully amortized conventional loan that's no balloon payment, no call on it, then it's probably considered reasonable, it's not eligible. What I'm doing right now is actually taking a look at other SBA loans that SBA is allowing us to refinance because we have a fixed rate program that we rolled out a couple of years ago. And the market for SBA financing, 7(a) business acquisition financing is typically variable, prime plus. And so generally there has to be at least a 10% increase in cash flow due to the lower payment. And in most cases, it needs to be on unreasonable terms. So if you have a private money loan that you obtained to purchase a business only that typically would carry a 10-year term with me, and that private money said, hey, we'll do this and it's going to be a 5-year term. Well, technically that's unreasonable in the eyes of SBA. So I could take that loan, refinance it, put it over a 10-year term. Or if you have a conventional loan that has a balloon payment in it, maybe it's due a 20-year term or 25-year term even, due and payable in year 10 or year 5 when you purchase a building or piece of real estate, that's considered unreasonable because you have that pending balloon payment, that call period. So that's eligible for refinance. And what we can't do is refinance to reimburse any shareholder for their contribution into the project or pull out any shareholder equity or do a cash out refinance. That's not allowed. There's ways to get working capital in the hands of some of these owners for sure by giving them either a line of credit or doing an SBA 7A loan that allows us to provide working capital to businesses that need it, albeit it needs to be justified.
Mm-hmm. Okay. And let's talk about ground up construction because as an SBA loan lender, you can also work with them in doing their construction too, right?
Sure do. I have a ground up construction for a gas station actually going on right now. Last year, we just finished a $19 million project for a ground up construction for a gas station in the Central Valley that had some retail, had a quick serve restaurant there, had a big tunnel that we did. So yeah, it's absolutely possible. And for those again, kind of going back to what Steve was saying in our talk about experience and all that. I mean, we're looking for experienced owner operators, right? I mean, with a startup, with the acquisition of an existing gas station or any existing business, we could go back and look at the historical financials of the operation, right? Look at the tax,
Mm-hmm.
see what they've reported to the IRS, do a true cash flow analysis and analyze this and say, had we lent this money, 2-3 years ago, would it have been able to service the debt? Or if you're looking to build another location, we could look at your existing operation and say, hey, this is a good operator, right? And kind of encourage us to look at doing the new location. For someone that doesn't have any experience owning and operating gas stations are expensive to build. I mean, they're incredibly expensive. Building anything right now is expensive for sure. Right. And so, yeah, we're looking at those. I tend to do a few a year, mainly acquisitions of existing ones is what I'm seeing right now. But ground up constructions, yeah, if it makes sense, we love to do them.
But they're not as expensive as buying an existing one, at least. But the risk is there, I mean, for inexperienced people. Your point on buying an operating gas station with no experience and looking back in historical financials, that's valid. However, if you have different experience, you could do better numbers. Like when I've taken over sites from people that were stable, I've increased the sales and everything much more than them because I've added other types of products, cleaned up the site, opened up, made more space to walk around. Because here's something that most people don't know about gas stations, especially for the branded ones. They study consumer behavior very well. They make what's called planograms and schematics. You walk into a gas station, your whole route to the cash register is pre-mapped. They know where to put the salty snacks, they know where to put the drinks. They put it straight. So when you walk in and your brain is like, I could do a bag of chips, I could do this drink. Oh, and you know what? Let's add a beef jerky, let's add this. That's all pre-planned. If you're walking in, it's tight or it's not clean or the product's messy or it's not laid out in a way that's appealing, the sales are probably not going to be there. So I've taken over sites where they should have planned the route better or they weren't following the franchisor's guidance 100%, or they didn't know what other they call them flex items, which is items that the franchisor doesn't recommend you to put in, that you put in separately. They don't have the right flex items in the store. So they didn't try other things for the market. Like every market has different products that do well if you know your customers. So we'll have things that the customers in the area want to buy. And that changes the profit, the sales, every little thing in the analysis when you reanalyze the site. So you would add the value. So when you want to talk about value add, because a lot of investors, they say, I'm going to buy this apartment. I'm going to add another unit. I'm going to put new dryers and washers and justify raising the rents. This is the equivalent of that for a service station, what I just described.
Yeah. I'm going to change gears for just a second here. And I want to talk to you about the Realtors Commercial Alliance of California, because we are the only commercial focused association of realtors in the state of California. And the mission statement at the Realtors Commercial Alliance is, as the only commercial association of realtors in California, we empower members to thrive in commercial real estate through education, networking, and fostering collaboration among commercial residential real estate professionals and business brokers. And so if you are a commercial realtor or a residential realtor or residential realtor who is interested, we invite you to check us out. And some of the benefits of membership are education and training, such as this Zoom that we're doing today, or it's actually a live stream on YouTube. We do monthly Zooms where we get together, and we're going to be switching things up for the summer. So we'll be making an announcement to our email list about that here in the next few days. So if you are not part of our email list, please go to rcaoc.org and put your information in there so that you are notified as new events are coming. Now, coming up next month on July 8th, we're going to be in this time slot, which is towards the beginning of the month. On July 8th, we are hosting Eric O'Neill, and Eric has got a fascinating story. In fact, a movie was made about him, and even use his name is actually like a true story of how he, as an FBI agent, took down the biggest traitor in the FBI to ever sell secrets to the Soviets. And if you want to go watch the movie, it was called Breach. It came out in 2007. So Eric is going to be joining us next month to talk about trust crisis in commercial real estate, and knowing, are you making a deal or are you dealing with a deep fake? So this is going to be a lot of fun. You're going to want to be here next month for that. So we do have a calendar, got a lot of things coming up. And our sponsor for the Realtors Commercial Alliance is defertax.com. So check those guys out. And speaking of taxes and service stations, I want to just, and I actually had a tax practice for a dozen years. So taxes are really interesting to me. And I think that as real estate brokers, the more we know about different areas that we can add value to people when we're talking about to them about, what assets they want to be buying, what assets they want to be selling, who they want to sell them to, or if you're representing the buyers, the more value add that you can give from your life experiences, the better off you're going to be, and the more information you know about the asset that you're doing. And this is a very, very fascinating thing. And it's called the retail motor fuel outlet. And this is something we're not going to go into it in much depth, but I have found that very, very few people know about this. And a lot of people, especially if they're mom and pop organizations, their tax advisors may have no clue about this because this is specialized. And so if you come in and you're bringing extra information that people aren't aware of, it's a way for you to add value. And in this situation, it allows you to accelerate your first year tax deductions. And I think all of us have heard of cost segregation. Well, actually, no, probably a lot of people haven't heard of cost segregation, where you can use that to add some fuel to the fire so that you can accelerate what would be long-term tax deductions into the first year of ownership. And so a hypothetical, I actually pulled up the tax record yesterday of a brand new branded service station that just went into business in our area. And I looked at what the tax assessor's office said for the value of the total transaction and the value of the real estate. Now, this, of course, doesn't include any of the personal property. So none of the fixtures inside the building, or what they were doing with their soda machines or anything else, their hot dog stands, none of that was included in there. But if you take your typical deduction of what you could do on this piece of property over with a 39-year deduction schedule, you're looking at $68,000 a year as your first year tax deduction, and then that carries forward. If you use cost segregation to be able to accelerate the components that go into that building so that you can use Section 179 to expense them, you'd be looking at a first year tax deduction of $636,480. But when you qualify under very highly specialized, very targeted section of the Internal Revenue Code as a retail motor fuel outlet, you can actually generate so that your first year tax deduction on this specific hypothetical example, almost $2.5 million as your first year tax deduction. So this is the kind of stuff that if you're going to specialize in service stations, this is the kind of stuff that you need to know. And the more you can demonstrate to your clients that you know that you have specialized information to help them, the better off that you're going to be. And I need to take my sharing off of here. Oh, there's my controls. So, what do you guys think about that?
Well, as an investor or an operator, I've factored in a lot of that in my analysis too. So one thing when you talk about talking to your buyers about these tax strategies, this could help them make that move, pull that trigger, buy that property, buy that service station. Because when you have this advantage, it makes, your cash flow technically look better on paper and puts you in a different position to want to make that investment versus because one big thing when you buy any real estate is once you tackle the first few years of the debt, whether it's after that you do a refinance or let's say your rent went up or the cost of things went up and then your cash flow position is better, then your deal looks a lot better down the line. But when you do a lot of that up front, that kind of changes things for you. And that makes you more apt to just buy the service station or buy more. So that's one important thing. So yeah, knowing these things are very important.
Yeah. Kelley, do you have anything to comment on that? As a lender, you don't really deal with the tax issues as much.
No, we don't. And like Stephen mentioned, we care about cash flow, right? So depreciation is a non-cash expense, right? So in our analysis, we add back the depreciation to determine the cash flow that's available to service the debt. But for an operator, I mean, I think there's some huge tax advantages with that for sure.
Yeah. And if you really are an astute broker, you're also going to be helping steer your clients maybe to look at opportunity zones. And opportunity zones have got a huge, huge potential impact because when you do these accelerated deductions, you have to reclaim a lot of that or all of that depreciation when you go to sell, and you have to redeclare that as ordinary income. But if you're able to put together your project in an opportunity zone and you hold it for 10 years, then there's an opportunity so that you have a step up in basis so that you do not have to reclaim any of that depreciation. You don't have to recapture it at all. And you can end up avoiding both ordinary income tax and capital gains in some situations. But these are all situations that you need to consult a tax advisor. But if you're a broker and you're looking to really figure out how to serve clients best, these are things that you need to become aware of, study them so that you can give great advice to your potential clients. So Steve, when you sold service stations, have you sold them to buyers or have you listed them for sale?
Both.
Okay. And tell us about how you prospect.
Prospect for clients or prospect
It's a wide open question because you need a prospect both for buyers and you also need a prospect for locations.
So I'll go one at a time. So for buyers, I list them on LoopNet and the MLS, like a typical broker would want to do, and I make sure to use the CDX mailer, and I go to networking events. I talk about my transactions or what I've got going on, and the CDX mailer and networking has really helped me in terms of getting people to look at the sites. And aside from that, in terms of getting my own clients, I mean, I have a network of people that I interact with, and usually the people I'm serving are people that I've, done business with in other capacities. So, but I'm more focused on representing my people now. I'm open to the public, but I have a group of people that they give me plenty of business that where I just focus on them, but I'm always open to do more deals. I'm also looking to buy for myself more because given a lot of the stuff we talked about, this is how I look at things. I'm always looking to buy more. So um, when I go and I look to buy, what I do is I look at multiple things. I look at where it's located. I look at what they have it listed for, and then I look historically when they last sold it, what they paid at that time. I pull title and I see the real estate side at least. The business side, you have to ask and see the
Mhm.
documents. Well, that's not public. Okay. And then, I kind of do my own numbers. And I even compare the site to what I've used and what I've had or have in the past or stuff I've done for others. And you could make like kind comparisons. Like I was like, oh, this reminds me of this property, even if it's in a different county. Exact same square footage, brand, all, even the land is, because here's another interesting thing I've experienced with a lot of these branded sites. They were built by similar developers if they were owned by the franchise themselves back and when they were corporate stores. So they were built pretty much the same, a lot of them, even different
Mhm.
counties. So I will make exact comparisons and I'll look at their numbers. And sometimes I also find them to be almost the same, very similar. So then I start to think, if I pay this price today, will I be able to yield the same results or better? And if the answer is no, then maybe I'll pass on that. If I see that owner currently isn't maximizing the use of the site as much as they should, that's my growth opportunity. Or if I can add a product like E85, or if I can add car charger, something like that, which I've done, or diesel. These have been my value add items. I'll go for that deal 100%. And one of my last deals, I've added all three of those. And the cash flow is a different situation now. And now
Mhm.
I've added the value. If I go to resell it, I have a lot of value I've added to that. I'll just put it that way. So,
Well, and one of the things to take into consideration too is as a broker, if you find a site that is underutilized, maybe it doesn't have diesel, maybe it doesn't have the chargers, maybe the underground storage tanks have to be redone, and you
oh
can
yeah,
buy an existing facility in an opportunity zone and you've got 30 months from the date of purchase to be able to make those improvements to reach the qualifications, then that's another huge incentive for the buyer to be
yeah.
able to buy, make the improvements, and with a 10-year hold qualify for those additional tax benefits.
That's a good point you made about the tanks. So double fiber wall is a requirement now. It wasn't a
Mhm.
requirement back when a lot of these sites were built. So thankfully, whatever I've gotten into, my clients, they've all been double fiber wall. But some sites, when they were built like long, many, many years ago, they didn't use that. So they either had to shut down or redo it. And these tanks are expensive, very expensive. So it's a good point you mentioned with that, tying that into an opportunity zone. If you have that, if it's in that area, great. If not, I mean, that's a big capital expenditure. That's something you would probably try to negotiate while you're kind of in the LOI phase, at least. But they're very expensive, and not all sites did it. In my experience, most have because they probably would have anticipated something like this coming up. And also, leaking is very low chance when you have that kind of a tank underground, and it passes most phase one environmentals. I've only had one deal where they recommended but didn't require a phase two. And then that's a whole nother lesson. But I've disputed that because some banks, when they see the word recommended, they'll force you to do it. And I kind of said, why are you recommending it? And we had a whole discussion and got that tossed out. But when it's double fiber wall, you're banking on a pretty good tank, especially if they're following all the testing and everything. Some sites, again, when you talk about regulation, if they're not following the testing and everything, then they might have some problems. But that's a good point you mentioned with the tanks and opportunity zone as well.
Yeah. So Kelley, in your looking at the clients that you've served over the last 24 months, who are they? Are they existing operators that are expanding, or are they investors that are like wanting to get into the business, or who are you serving, and what's the market there?
Yeah, mainly existing operators that have either sold and they're trying to buy a bigger station and use 1031 exchange money to get into it. But it's not very often that I come across somebody that doesn't have any experience, never owned and operated a gas station before trying to buy one. It's not impossible, but we're just looking for really, really strong borrowers. Outside income, right? Liquidity. I mean, the whole, underwriting, every underwriting metric that you could think of, that's what we would be looking for. But majority of my clients are people that have, they are looking for location 2, location 3, or sold a location, moving to a new location, a new area, and want to acquire a gas station there. So, but of the ones that we're doing ground up constructions those are experienced folks that have owned and operated gas stations in the past and probably own and operate multiple ones now.
Okay. All right. Well, we're coming up on an hour. Can you believe that hour went really fast? And do you have any final thoughts that you'd like to share with us today, Steve?
No, I don't, I'm not, no, almost coming on an hour. I mean, yeah, this is a very interesting product type. And, we could probably do a 10-hour talk if we wanted to. And there's so many different other lessons. But, in this type of product, just expect to be running a whole organization and business within itself. So, do I recommend getting into this? Yes, be ready to get to work and be ready to learn how to run a business and to build a team. And when you build the team, you'll set yourself for success. If not, you will be the typical mom and pop, one operation, one site, and nothing wrong with that. But if you want to grow and scale, you got to be a good team builder and you got to work on that.
So, but what's your advice to the commercial broker,
To the commercial
or
broker,
maybe the
because
residential broker
yeah,
who wants to move into commercial? What would you tell them?
what I said earlier about getting the templates, learning how the templates work, and reviewing possibly an appraisal, do an intro to a commercial class where they talk about cap rates and all that. And for gas stations, we use GPM, gross profit multiplier, and apartments and other properties, they use gross rent multipliers, GRMs. That's really the difference. And then just understanding the categories and how the profit's done. There's a good segment by, I think, Entrepreneur did one where they talked about, and you can Google gas station entrepreneur, like, and they'll have like a short video where they talk about the margins, like lottery and cigarettes don't make the money on it. You make money on the snacks and the drinks in the store, that kind of stuff. So if you understand all that, you're ready to have your conversation. You're ready to open your first escrow. But after you dealt with one or two escrows, this should be second nature to you. It's complicated, but not as complicated. It's doable. Don't be deterred by two escrows, bulk transaction, all these requirements. Because as I said earlier, most of these requirements are done by the escrow company themselves. You just got to be able to communicate to your client. Oh yeah, they're working on those 227, or they're working on this and they're working on those. You just got to understand that conversation. But the work itself, the escrow's handling that. You just got to put the deal together.
Okay, Kelley. So for brokers who are looking at jumping into the service station segment, And what is your advice to them as the lender?
Yeah. First and foremost, Chris, thank you so much for putting this together. It's really good to get the different perspectives here. Number one, with the broker's perspective, right? And then also, with Steve being a part of this too, having the experienced owner operator perspective combined with the law perspective and the broker perspective too. It's really good. I mean, the philosophies and the thought process between brokers, lenders, and attorneys a lot of times in these types of transactions aren't always on the same page, right? So it's good to get everybody's perspective. But for those that are looking to get into gas station brokerage, these transactions for the most part involve lender financing to put them together. So if these types of transactions, financing wise, there's a lot more to them than your typical mom and shop retail operation, right? So you really want to work with an experienced lender that has experience with gas stations. Not every lender in the nation likes to even touch gas stations. They don't like the environmental risk of a gas station, how sensitive it is to consumer spending in the economy and the political stuff here in California, right? So I've been doing this for 18 years here, and I love gas stations, right? So if you pick up the phone and you get on the phone with a lender, that lender should probably be able to tell you very quickly in a short period of time whether or not there's enough cash flow that they see to be able to put some type of loan together. So work with a very experienced lender. That would be my recommendation.
All right. Steve, Kelley, thank you very much for joining us today. Greatly appreciate the wisdom and expertise that you've added to this conversation. For those of you who made it to the end of the live stream or the replay, we'd like to invite you, one, to make sure that you like the video, comment on it, and subscribe to the channel. And make sure you click that little bell so that you're notified of future things. Keep in mind that coming up, our next segment that we're doing is going to be talking about cybercrime and commercial real estate. That's going to be very exciting and very important, especially in the age of artificial intelligence, where cybercrime is. When I first heard Eric speak, he was talking about the size of the economy of cybercrime. It's the same, the gross national product would be the third in the world. That's how big cybercrime is. It's huge. And I know people who are, have been victims of cybercrime. I even was listening to another podcast of a billionaire speaking, and his executive assistant was contacting him and saying, "Hey, I got this transaction taken care of for you, and the $75,000 has been transferred." And it was cybercrime, and he lost $75,000 because his executive assistant had received a voicemail from him saying that she needed to jump on and take care of this transaction, and it was all fake. So very important. A lot of other good things coming up. We're going to do talking about different real estate segments, and we also are going to be talking about economics and how the economy is changing and what you can be looking forward to. So again, thank you everyone for joining us today, and we look forward to seeing you on the next episode here on the channel. All right, take care, guys.
Thanks, Chris.
Thank you.